Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, quite a eventful week. In fact, eventful session, so to say, for Wall Street last night. Given the fact that we had Trump keeping the entertainment on, he there were reports that he was looking at firing Fed Chairperson Jerome Powell. In fact, there were reports saying that he had already drafted a letter as well. For that purpose, but in the end he came out and said that he's not going to do that. He denied or downplayed reports that he had actually drafted a letter to fire Jerome Powell. But that did get the stock markets reacting quite reacting to it. In fact, Wall Street did tumble after the reports, the initial reports that Jerome Powell could be fired, but then after Trump's denial, staged a good comeback. In fact, the Nasdaq managed to clock in another record close. Asian markets weren't all that enthused this morning, given the fact that Japanese exports data came out and not enthusing, and the markets were reacting to that. Concerns over recession when it comes to the Japanese economy in the absence of a trade deal with the US, wherein Trump has also said that 25% tariffs may stay for Japan. So yes, not looking all that great when it comes to the Asian pack. GIFT Nifty, however, was hinting at a mildly higher start when I last checked. In the pre-open, we are looking at a mixed picture, flat, but the Nifty right now in the green, 4 points higher when it comes to the pre-open session. But lots to digest. Earnings season is on in full swing. We had Tech Mahindra reporting numbers yesterday. You have Axis Bank and Wipro as well reporting numbers today. Angel One came out with numbers post market hours. Howler set of numbers. So the stock will be reacting to that. So we'll focus in on that as well. And of course, your stock related queries, as always, will be in focus. Keep them coming in on a live feed. We'll try and get them addressed as well. But for the Nifty, mind you, 25,230 to 25,260 will be crucial to watch out for, because that is the 20-day exponential moving average, and we need to cross that level to make our way towards the 25,300 mark. Lots to discuss with our guests, but before we get into all that, let's quickly take a look at the top stories at this hour. Wall Street ended higher amid volatility. Key indices rose, with Nasdaq clocking in yet another record close after Trump's denial on firing Fed Chairperson Jerome Powell. Asian markets started on the back foot as Japanese exports fall for a second straight month with no US trade deal in sight. The GIFT Nifty was positive, and in the pre-open we are looking at a mixed picture. Crude oil prices ease overnight as US inventory build offsets signals of rising demand. Futures, however, were rising with the Brent around that $69 per barrel mark. Meanwhile, gold prices have pared gains after US President Donald Trump says it is highly unlikely that he will fire Fed Chairperson Jerome Powell. Donald Trump signals negotiations for interim trade deal between India and the United States are progressing and could be finalized soon. Speaking during a bilateral meeting in the White House, Trump hinted at a potential announcement, saying we have another one coming up, maybe with India. SBI announces its first equity fund raise in 8 years, launches QIP to raise 25,000 crore rupees. Floor price set at 811 rupees per share, which is a 2.3% discount to its closing price of 831 rupees. And Tech Mahindra's first quarter constant currency revenue falls more than expected, while margins improve sequentially. In key earnings today, watch out for numbers from Wipro, Axis Bank and LTI Mindtree. Right, take a look at, a wrap of what happened in trade yesterday. We ended near the flat line, but we staged a good recovery from the day's low. The Nifty did manage to close above that 25,200 mark, led by the PSU banking pack, which rallied on reports of reports related to FDI cap hike that the government is mulling. So because of that, we saw good traction in the PSU banking lot. SBI was among the top gainers on the buzz of the QIP launch, which of course has been launched now. M&M was the other mover, which staged a good rebound from the day's low and in fact ended as a top Nifty gainer yesterday on reports that the GST Council may look at reducing rate on farm equipment. Wipro, Tech Mahindra, all these IT names have been seeing buying interest in the last couple of sessions, and ahead of numbers today, Wipro was seen gaining. On top of the mind also comes Paytm. That stock crossed 1,000 rupees mark for the first time since December 2024. If you look at the breadth, that was in favor of advances. The mid-cap index and the small-cap index, both of them gained for a third straight session yesterday. The India VIX also deserves mention because it has dropped to a fresh 15-month low. In terms of fund flows, foreign investors remain net sellers. DI buying support continues. FNOQs, if you look at the put call ratio, that rose to 0.92 vis-a-vis 0.88 in the previous session. Talking about the stocks in the FNO band, today in focus will be Angel One. That's in the FNO band. Numbers came out not all that great. Let's see how the stock reacts. Hindustan Copper remains in FNO band, but Glenmark and RBL Bank are out of the FNO band. But to understand the setup for today and what the strategy should be and how are the technical charts pointing or where are they pointing, let me bring on board Chandan Taparia, Motilal, Oswal joining in this morning. Chandan, as always a pleasure. We managed to clock in a close above that 25,200 mark, 25,230, 260. That's a 20-day EMA crucial zone. But would you stick your neck out and say 25,300 is a possibility today?
Yes, good morning. Thanks for having me. So, Nandita, yes, I totally believe that market has formed the short-term bottom at 25,000 on last Monday. And after that, supports are gradually shifting higher and it has potential to head towards 25,300 to 25,500 mark. So, for day point of view, we can look for target towards 25,300. But for 2-3 day point of view, we are expecting this rally to extend towards 25,500 kind of level. Let me remind you that in the May and June, most part of the day, the market was struggling to surpass 25,000 marks. And on this Monday, Nifty exactly took support at 25,000. So clearly a role reversal pattern. The earlier hurdle now acting as a support, and because of that, we are expecting next leg of rally. So because of that, expecting market to hold the support of 25,000, spike to 25,500. For intraday point of view, needs to hold about 25,100 for a bounce towards 25,300 marks.
All right. Okay, that's about the setup. Bottom has been formed at 25,000 for the Nifty for the short term. What do you do with the banking names ahead of numbers? The likes of Axis, of course, that reports today. Over the weekend, we have HDFC Bank and ICICI Bank as well. HDFC Bank was in focus given the fact that it will be considering its first ever bonus issue along with its result. The stock has been holding on to that 2,000 mark. A possibility of surpassing the 52-week high soon, and secondly from the PSU banking lot, SBI, yesterday as well that stock was buzzing. It has PSU banks have also been doing well compared to private banking names, but now that QIP has been launched, and the floor price is also at a discount of 2 to 2.3% or thereabouts. So, your take on the banks and ahead of numbers, and for SBI particularly, now that the QIP has been launched.
Yeah, so Nandita, we have more positive stance on Bank Nifty than Nifty Index. Bank Nifty has been moving in a rising channel from last 65 trading session, and just 4 days back it took support at the lower band of the trading range. In fact, from last 15 days, it has been moving in between 56,600 to 57,500 or 57,628 marks. I believe the bottom has formed here with the support trend line, and it has potential to head towards the new lifetime high of 57,628. So with support of 56,750, we are recommending to go long for an upside target towards 57,628 to 58,000. Positively on the PSU name, in fact, most of the PSU banks have bottomed out on the daily and the weekly chart. In fact, the SBI has given a consolidation breakout. We are expecting further 3 to 5% run up in the counter with support of 815 as State Bank of India has potential to rally towards 855 to 860 kind of level. PNB also looks good. It has potential to head towards 120 kind of level. In fact, positive on the Canara Bank which has potential to rally towards 122. So positive view on the Nifty, expecting fresh lifetime high in the index, while most of the PSU banks like SBI, Ken Bank, Union Bank, or PNB could be in focus. Now, on reply on private bank, ICICI Bank has been consolidating in a range, but the good part is 1400 is major support. Looking at SDFC Bank, I believe momentum could be there with support of 1970. It can head towards 2030 kind of level. So positive stance in Bank Nifty and expecting most of the private bank to outperform in this market scenario.
Okay, expecting private banks to outperform and expect levels of 2030 or thereabouts on an HDFC Bank. Just to quickly want to take our viewers through what to expect from Axis Bank before I come to you again, Chandan. Loan growth, may have slowed in the quarter gone by, and margins are likely to remain weak, and that could impact the first quarter numbers. If you look at the net interest income, that's expected to rise just about 2%. Profit is also expected to just see a modest growth of 3.5%. And of course, loan growth, as I mentioned, is likely to be slow. It's expected to come in at 7% on a year-on-year basis. Margins could contract somewhere around 32 basis points to 3.5%. So yes, Axis Bank, that should be on your radar. Numbers come out post-market hours. Today. In terms of tech earnings then, technology pack has seen some bit of buying interest. Yesterday as well, the IT pack managed to hold out, so to say. Tech Mahindra in fact was higher in trade ahead of earnings. Numbers came out, profit down 2.2% on a quarter-on-quarter basis. That missed expectations. I want to talk about margins. They have improved to 11.1% vis-a-vis 10.5%. Managed to post steady margin growth, but top line growth continues to be a pain point. The constant currency revenue growth was down in excess of 1%, so it was 1.5% almost lower, and fell more than expected. Expectation was somewhere around 0.5 to 0.7% drop, but same thing happened with TCS as well. The constant currency revenue dropped more than expected. But deal wins have been fairly healthy. Looking at the charts of a Tech Mahindra, which has outperformed its peers, if you look at the charts, how are you placed on this particular stock? Do you think this will continue to outpace peers like TCS and Infosys at 1580 or so? What should one do with the stock?
So stock is slightly negative. In fact, it has been making lower top, lower bottom from last 4 or 5 weeks. The good part is that multiple supports are visible at 1530, and 2 days back it made bottom near 1550 marks. So I believe 1530 could be a key level. So if manages to hold, then only we can see a recovery towards 1650 kind of level in Tech Mahindra.
Okay, that's the view on Tech Mahindra, but just about a minute to go for the markets to open. Want to get in your recommendations for our viewers before the market open, Chandan. What are you, suggesting?
So first I will buy on SBI, State Bank of India, with support of 820, looking for an immediate target of 850 plus. Second trading idea will be buy on counter like LT Food, that is Dawat. The stock has seen good momentum. In fact, we have seen delivery volume as well in the counter. So that LT Food also looks good, expecting the rally of 5 to 7% in the counter as well. So SBI and LT Food will be two preferred idea in the morning tick.
Okay, SBI and LT Foods, two preferred ideas from Chandan, and SBI, by the way, is the top Nifty gainer. But let's first look at what the index is doing. Extremely flat, but with a positive bias that was largely on expected lines. The mid-cap index, however, is taking the lead as of now. 0.2% kind of gains coming in on the Nifty Midcap index. Breadth 4:1. Let's wait for it to settle down before calling it a trend, really. But in terms of sectors, then let's see which are the sectors that are taking the lead, because yesterday it was the PSU banking pack, IT, FMCG, all of them saw buying interest. Today, it's a mixed picture. IT has taken a back seat. It's down 0.3%. But what's doing well is the auto pack. That's up 0.3%. Yesterday, the auto pack started the day on a subdued note, but then managed to reverse course and end the day with good gains. So today we are building on those late gains that we saw yesterday. The Nifty auto pack is up 0.3%. Aside of that, you have metals. That was one pocket that was out of favor yesterday because of strength in dollar. But today we are seeing good traction in the metal pocket as well. That index is up 0.3%. Pharma once again extending gains. PSU banks extending gains. Real estate basket is also doing well. 0.5% gains there. What's out of favor is IT. Aside of that, all the sectors are trading with gains. No big sectoral mover as of now, but the bias is largely towards the positive side for most sectors. Now, in terms of the stocks, let's take stock of which are the stocks that are out of favor. Tech Mahindra, that's the top Nifty loser, and no surprises because constant currency revenue growth missed expectations, fell more than expected, almost 1.5% drop, which is why it's down 1.5%. ICICI Bank is the other one that's in the red. In fact, the Nifty Bank index is trading with a negative bias this morning. You also have SBI Life that's trading in the red. Wipro ahead of numbers trading in the red. Asian Paints extending losses today. HCL Tech, HUL, Infosys, Axis Bank ahead of numbers, all trading in the red. Talk about the gainers. As I mentioned, SBI is the top Nifty gainer, followed by IndusInd Bank. Some of the auto names continue to hog the limelight, the likes of Eicher Motors, M&M. They're trading higher. Bajaj Auto as well had a down day yesterday, but now managed to stage a good comeback. Maruti Suzuki in the green. Shriram Finance, that was among the top laggards, has managed to recover lost ground. Maruti Suzuki, as I mentioned, Bharat Electronics. So yes, list of gainers is longer this morning. So let's take heart from that. And the Nifty up almost 20 points at the current juncture, 25 to 30. That's where we are at. Let's talk about some of these auto names, the two-wheeler names, so to say, Bajaj Auto, Hero MotoCorp, etc. Day before yesterday we saw good traction, but yesterday they saw some bit of a selling pressure. For the very short term, say a week or so, how should one approach two-wheelers now, Bajaj and Hero?
So yes, to reply on auto name, in fact, Hero Moto has seen a positive price action. In fact, 3 days back, it gave a major consolidation breakout, rallied well. However, from last 2 days, it has been consolidating, but trend is intact to positive. I believe with support of 43.50, it can head towards 4,500 kind of level. Bajaj Auto, which was under pressure, but managed to hold the bottom near almost 8,050. I believe with support of 81.50, it can head towards 8,600 kind of level, but more positive on Hero Moto than Bajaj Auto. And selective auto counter could be in focus as well. And one name like M&M, Mahindra and Mahindra, has potential to give the breakout. One can buy the Mahindra and Mahindra with support of 31.80. It can head towards 33.20 kind of level.
Okay, Mahindra and Mahindra, 33.20 kind of levels, watch out for that. Hero Moto, more bullish call there. Remember, the company also came out with its FY26 strategy where they'll be making deeper inroads in international markets, especially the European markets. The stock, did rally 5% day before yesterday, but yesterday came under some bit of selling pressure. But Hero Moto looking better on the charts compared to a Bajaj Auto. Let's talk about Paytm as well. The stock managed to cross that 1,000 level for the first time since December 2024. Do you think it's going to sustain these levels? Your thoughts on how one should approach Paytm?
Yeah, so like we have seen good recovery in the counter from 857 to 1014 in last 4 to 5 weeks. Major trend is turning positive, has been making higher top, higher bottom. However, after the strong movement of last 8 days, some sort of consolidation could be there. But buy on decline is going to be the clear stance. Till it holds about 980, decline could be bought for an upside target towards 1025.
Okay, that's about Paytm. But want to talk about an Angel One. The numbers haven't been all that great, but the stock is trading in the green. 0.7% higher on this stock. Last 1 month it has lost somewhere around 5%, and last 5 days it has been extremely flat. Taking a look at the profit, that was down 60%. Revenues saw a 20% drop. Margins also contracted quite sharply, came in at 24% vis-a-vis 33.4% on a year-on-year basis, but the stock is surprisingly holding out. The stock is also in the F&O band today. What's the next level to watch out for in terms of support for this stock?
Yeah, so don't want to comment more on the broking names. Disclaimer and disclosure will be there with personal holding in selective counters. But yes, I have positive on the capital market theme, more positive on the counter from AMC and depository. So like in depository, if someone is looking at CDSL looks good, it has made bottom near 1660. And I believe with higher support of 1685, it can head towards 1780 kind of level. Positive on the two AMC like SDMC, AMC looks good for an upside target towards 5450 to 5500. Even Nippon India, NAM India looks good for an upside target towards 900. So more positive on the AMC and depository.
Okay, more positive on AMCs and depositories from Chandan. But Chandan, let's talk about some of these mid-cap IT names that have reported numbers thus far. The likes of L&T Tech and Tata Tech. I want to ask you, which one do you prefer now? Because Tata Tech, reacted negatively. Numbers weren't all that great. In terms of L&T Tech, it's holding out. Numbers came out, 0.7% growth in net profit. Managed to beat expectations there, but in terms of revenue, that was down 4%, missed expectations. Margins were steady at 13.3% vis-a-vis 13.2% on a quarter-on-quarter basis. Dollar revenue largely in line, but if you look at the brokerage calls, Nomura has a reduced call and the target price is at 3,600 rupees. That's much lower than the current price. They said that FY26 double-digit revenue growth guidance appears to be ambitious, and EBIT margin could come under pressure in the second quarter, and they are expecting gradual recovery going forward for margins through FY26 to FY28. Morgan Stanley, on the other hand, has an equal weight call. Target price is at 4,500 rupees per share, and for them the results were in line with expectations. But we've seen results from both L&T Tech and Tata Tech. Which one would you prefer now?
So again, Tata Tech looks more positive compared to LT Tech, which has been consolidating in a range. So if first I comment on the LTTS, it has got stuck in a range from last almost 8 to 10 weeks. Multiple support at 40 to 50, but hurdle at 44.25. But I believe Tata Tech can do well. However, we have seen a corrective move from higher levels, but it has formed the bottom and holding well above key moving averages. So with support of 715, it can head towards 758 kind of level.
Okay, that's the view, and Tata Tech, of course, looking better on the charts. So with that, let's shift focus to our viewer queries that are trickling in this morning. I'm going to start with some queries on banking names. I saw a couple of queries on Bank of Baroda. Coming in from I really can't get the person's name here. But as we know that PSU banks are doing well, and we did speak about the likes of SBI, etc. But what about Bank of Baroda? If somebody has positions here, how should they go about it?
So one can hold. In fact, we have noticed that in last 3 months, every decline is being bought. In fact, in the month of May, it declined to 212, recovered to 250. In the month of June, it declined to 230, recovered to 255. In this month also, it corrected to 236, recovered to 250. So declines are being bought. That is the for sure for most of the PSU name. Now it requires a follow-up buying activity. And in fact, from last 3 days, high tops, high bottoms are being formed. So buy on decline will continue. Use any small decline with support of 241 and look for an upside target towards 258 to 262 in Bank of Baroda.
Okay, those were the levels. I hope that answers your query. There's one more on Bank of India. This one's coming in from Naveen. Let's get his query addressed. He's been asking for quite a few sessions now. Particularly Bank of India has been quite sideways. If you look at the last 1 month chart and even last 5 days, seen some 2% kind of an uptick, but it's inching towards its 52-week highs. Could that be a possibility, or do you expect it to remain sideways?
So yes, we are slightly positive on the PSU banks. In fact, in the morning commentary, we advocate about going long in the selective PSU bank. So yes, slightly positive view. 113 is the support for an upside target towards 125. The only problem is that momentum suddenly gets fizzled out and stock remain consolidative. So it might take time, but follow-up activity is required. I think one should look for an upside move towards 125 plus.
Okay, look for an upside move of 125 plus. There's a query on Tata Motors from Geetu Sandesh. What's the short-term view here? The stock remains, stuck in a reverse gear. Last 6 months, it has shed somewhere around 13% or so. No big traction if you look at the last 5-day charts as well. How do you approach this stock?
Actually, it's not in reverse gear, it's in neutral zone. So neutral gear is there. Stock is not inching upwards, but at the same time, supports are intact at lower levels. I've noticed that from last 22 days, the stock has been moving in between 666 to 700 marks. We have seen call writing activity, which is not allowing this counter to move beyond 700. But at the same time, 666 is acting as a key support. So as of now, we are in a broader range. So if it moves beyond this boundary, then only we are expecting fresh leg of rally. Either wait and watch to hold above 700. In that scenario, it can go to 723 and much higher. And if it breaks 666, then it can see a correction towards 640. So I think either play the range between 666 to 700 or look for a consolidation breakout of this trading band.
Okay, in consolidation mode, more like stuck in traffic, Chandan, when it comes to Tata Motors. But let's talk about ITC as well. There's a query on ITC. I want to talk to you about the FMCG pack as well. It has seen, it has been witnessing good buying traction on and off. Any trend that you are spotting when it comes to ITC in particular? Look at the last 1 month. The stock is again not doing much.
Yeah, so in fact, the last month was quite consolidating. I have seen very smaller move first time in this counter. In fact, in the month of June, it traded in between 411 to 428. There is only 17 points, roughly 3% movement in the entire month of the June. So which clearly indicates absence of interest, whether on the buying side or the selling side. At the same time, we also noticed that FMCG pack was not doing well. In this month, it again made the bottom near 411 and slightly inching upwards. So I believe 410.11 could be a major support. Declines has to be bought for an upside move towards 435.
Okay, that's the view. Declines have to be bought and the stock could move towards 435. Let's quickly squeeze in the last 3-4 queries as well. Satish Guntur wants your long-term view on Vedanta, 448 right now. Even this stock is, I think it's still stuck in a range as well. How would you look at this stock?
So like Vedanta has seen a decline to 420, recovered, has been consolidating in a range. Again in range bound, declines are being bought, upside seems to be kept. So 440 to 460 is probable trading range as of now.
Okay, that's the range. Kanchan Biswas has a query on Tejas Network. At the current price, is it a buy for the medium term? What would you advise?
Yeah, so like Tejas Network has remained consolidative and corrective after that. For most part of the May to beginning of the July, it was moving in a range, but in last 1 week, it witnessed a correction from 700 to 627. So structure is slightly negative. I think just wait for some decisive hold. In fact, in the 2014, it made low near 650 and headed to 1500 marks. And we are just below that level. So I think the immediate trend is getting a pause. Wait for some more decline towards 620, 610 to accumulate the counter.
Okay, that's the view. Wait it out before accumulating. Last query then, Time Technoplast, that's the stock, Satya CK, short-term view and whether it warrants a fresh entry at the current juncture. The stock has been trying to, take off but hasn't really been able to do much. Is it a buy now or would you say wait?
No, it's a buy now. In fact, a couple of days back, we came out with a report on the same. It has been consolidating with higher base from last 25 trading session. It just requires a small follow beyond 460, and I think this time above 460 could open the door towards 500 plus kind of level. So I think one can accumulate with support of 430. It can head towards 500, 510 once it gives a decisive breakout above 460 marks.
Okay, that's the view on time Technoplast. It is a buy at the current juncture. But with that, we've come to the end of the query segment. Chandan would like to thank you for taking out time and joining in this morning and sharing your thoughts. Always a pleasure. Have a great trading day. And I look forward to connecting again sometime soon.
Thank you.
Thanks a lot. On that note, take a look at the market before we bring on board our next guest. Then, nothing sort of a session as of now. We are just very range bound, flitting in and out of the negative and positive zones. The mid-cap index is just about clutching on to the positive zone, although the breadth is strong as of now, 2:1, that's the NSE advanced decline ratio. Bank Nifty trading with the negative bias, and some of these life insurers have slipped back into the red. Yesterday it was a good day for HDFC Life, SBI Life and the likes, but today witnessing selling pressure. And in terms of gainers now, Sun Pharma has edged higher and it's the top Nifty mover, followed by the likes of Hindalco and Apollo Hospital. But to understand how the earnings season is panning out, what should the portfolio strategy be, what's the tactical call on some of the sectors that have started reporting numbers. Let me bring on board Sandeep Bagla, CEO of Trust Mutual Fund. Sandeep, always a pleasure chatting with you. First of all, let's talk about the market valuations. Citi Group this morning, in fact, it has downgraded Indian equities to neutral from overweight. Valuations could be, one reason why, this downgrade has come by. But, talking about the Nifty valuations, trading at somewhere around 22 times FY26, that's nearly 30% above its 15-year average. What, according to you, is justifying this premium? Are falling inflation and narrowing yield gaps enough to support the current valuations? And looking at the numbers, the first quarter numbers that have come out, how are you looking at how the markets are placed right now?
Good morning, Nita. Always good to be on your show. See, there are some positive factors which are contributing to the markets where they are. So interest rates have come down. That sort of spurs the consumption and investment demand, although with a lag. Also, the capex, government capex has been picking up. But there aren't too many positive factors right now. One thing that is encouraging is possibly that the expectations are low from the this quarter's earnings. So the negative surprise should not be that high. The markets have started discounting kind of 2028 earnings. But in the near term, while there could be a positive surprise from the low expectation base, it does not appear that the markets are likely to be surprised by good earnings very, very soon. So, one could expect lackluster earnings with some sporadic points of positive surprise, which could be compensated by some negative surprises as well. So it could become more stock specific and market, like you were mentioning earlier, that they are caught in a traffic jam. And there are headwinds in terms of global, slowdown threats. And Trump is also not making it easy for people to plan ahead. So the private capex, the elusive private capex is likely to remain elusive for some more time to come. And there's only so much heavy lifting that the interest rates and governments can do in terms of spending. So there is some amount of turbulence ahead, I would say, in terms of global, uncertainty and local lackluster demand for some time to come. So I think we are in a phase where we are in some kind of a jam.
Okay, yes, we are stuck in a jam. Looking at the markets, the way they've been moving in recent times, that's the right phrase to use, really. But, in terms of portfolio strategy for the short term, I mean, MF's mutual funds have been reducing their cash positions, right? So, where is smart money moving right now? At Trust Mutual Funds, if you are looking at sector rotation, which are those pockets where you're reducing your positions and which are those where you're deploying more cash?
See, we are underweight on things like FMCG, large IT companies. We are slightly overweight on capital goods, on capital market kind of stocks, where we feel that, earnings can surprise and the runway for growth is much longer than what is normally for other industries. So we feel that, in India, physical asset creation will be very important if India has to sustain growth for a long period of time. And more and more allocations are happening in creating that physical infrastructure, which could be in railways, or it could be in infrastructure, it could be in defense. So we are, still overweight on capital goods, and we plan to remain overweight for some time. Now, current earnings
Hmm.
don't really matter that much, but the long-term runway for growth being extremely high and long, I think that is what is driving us for these strategies. Compared to the
Hmm.
lenders, traditional lenders like banks, we are more optimistic on NBFCs and capital market entities because, again, the growth is likely to be stronger there, and we are making adjustments to portfolios depending on the news flows. But the near-term expectations are not that great. It is more the longer-term expectations that are driving our strategies right now.
Hmm. Okay, longer term expectations is driving strategy. But for FY26 as a whole, are you expecting double digit earnings growth?
I see again, it is one has to be slightly more granular. I think the large
Hmm.
caps are going to be in single digits, and the mid and small caps are
Hmm.
going to be in double digits. Now, also, there are certain companies which will grow, display faster growth. The risk or the trade-off is basically how much you are going to pay for the growth, and what happens if the growth surprises you either on the upside or downside. I think that is the critical
Hmm.
judgment call that one has to take. And if your investment
Hmm.
horizon is longer, that would tide over, the bouts of uncertainty and volatility in the market that would be there in the interim period. So this in around this
So
time, I
in
think since the margin of safety is not that great, one has to elongate
hmm.
their investment horizon to build that margin of safety.
Hmm. Okay, so within the mid and small cap basket, which are those pockets which you feel are commanding right price right now?
So we think that domestic, within domestic consumption, hospitality is good. Hospitality includes, hotels and hospitals. So I think those are the areas that are growing. The average income, the average insurance taken by a family is increasing. Now, if the average insurance that you take is already there, then you would probably go to a better hospital with more reputed doctors and better track record. So which is helping, the listed hospital sector is growing by 15 to 20%, and we expect this to continue. So there could be pockets like that. Hotels are also something
Hmm.
which, generally are doing well. So there are pockets which are doing well, led by, consumption, premiumization of consumption, which are,
Hmm.
some of the things which are looking attractive from the growth and earnings perspective.
Sure, point taken. Since you alluded to consumption, one end of consumption is, of course, auto, the entire auto basket, including four wheelers and two wheelers. Uh, the retail sales haven't really been picking up. If you see, the June sales, they have seen a slump across passenger vehicles, two wheelers, CVs. Will the festive season really revive sales? A, and from a longer term perspective, a lot of these safety measures kick in, right? And that could be an overhang. For instance, from January 2026, all two-wheelers will require, mandatory anti-lock braking systems. Now, this will force the industry to scale their production over six-fold within a short window. And it is, of course, expected to drive cost pressures and then, result in higher prices. In the four-wheeler segment as well, we are already seeing the impact. Maruti has increased its prices, citing standardization of six airbags as a key reason. Could these rising safety related costs dampen demand for autos as a whole? And how much of a tailwind do you see festive demand panning out?
See, the auto demand has been quite muted, I would say, for the last few quarters. And while interest rates have come down, I think maybe the worst of the auto cycle is behind us. But we'll have to wait for some more data to come. And you are absolutely right in pointing out that there are cost concerns on terms of building in safety and other regulatory requirements. So I think this will require maybe a few more quarters before we see any kind of a robust and sustained recovery. So I think this is going to be, autos are caught in a traffic jam.
Okay. Lastly, what do you do with life insurers? Some of the numbers came out yesterday. Premium growth has been healthy, but there has been pressure on margins, value of new business margins. But the product mix is shifting towards non-par savings and protection as well. So, how are you viewing the long-term growth and profitability for life insurers going forward? Do you think this pocket offers value?
From the portfolios that we have, I don't think we have any life insurance company. So, in terms of relative attraction, we are not really attracted to life insurance companies at this point. Uh, the
Hmm.
penetration of life insurance companies are still low and restricted to mostly, the tier one, tier two cities. With digitization and increasing penetration and increasing awareness, I'm sure that life insurance will be a very healthy sector. But at this point of time, we are not really attracted by, the growth and the valuation.
Hmm.
So we have not have anything in our portfolios right now.
All right, point taken. What about IT? Because this is one pocket where we've seen quite a few numbers coming out in the last few days. Experts have been pointing out that second half will be, when the recovery really kicks in. But tactically, if you have to look at IT, after looking at the numbers, would you have you changed your views? And if not, what exactly is your call on the IT back pocket after looking at the numbers?
So IT is also experiencing slow growth, and there are potential disruptors, which is, things like AI, which could add to productivity and at one end, but could also lead to uncertainty. I think the global uncertainty is still there. So IT will grow. Indian IT will definitely grow. The larger companies will grow at a tepid pace, I would say. I think the more excitement is there at the smaller companies, which are catering to specific industries or specific capabilities. And I think that is where we are invested. We are interested in two, three stocks which are there in more, focused IT, smaller companies rather than the large IT.
Hmm. Sandeep, you mentioned that you will be overweight on capital goods and the manufacturing side. Within that space, does EMS still excite you? Because some of these stocks like Dixon have already, seen a very good run and a correction, followed by a correction. Your thoughts on the EMS space in particular?
See, I think it's a high growth sector with very large promises. I think the valuations and, like you said, that market takes them high and brings them lower. But I think the overall trend is still high. I think the overall trend is still strong and it's pointing towards better prospects and higher prices. So we are still bullish on the EMS sector at this point of time.
Okay, bullish on the EMS sector as well. But before I let you go, any advice to investors who are looking to enter the market right now, given the fact that we are extremely range bound, is it a good time to enter?
See, I think the entry depends on what is your time frame. If you treat India
Hmm.
as a short-term, a money churning machine, it is difficult market. It is likely to disappoint one in the short term, especially, the short-term traders. But if you're a long-term investor, I think the growth story remains very robust and there will be bouts of uncertainty, there will be slowdowns. But I think India macroeconomically is in a far better space. And compared to other countries, I think we are likely to survive the tariff war also and come out stronger compared to others. And also we do have the demographic dividend, which is working, at the backdrop where more people are coming into the working class population and India will add maybe 15 crore people in the working age population in the next 20 years. So those tailwinds
Hmm.
cannot be denied, and that will show up in the longer term. So I think the best way to enter the market is, with a capital that you do not need for a long term, and that is the best way to play the equity market in current circumstances, and really elongate your investment horizon that you can, to the extent that you can, and invest in mutual funds which are not glamorous, which are not exciting, but should keep the
Hmm.
excitement aside and prepare for the longer term, and generate some good returns which are likely to emerge from the equity markets over a long period of time.
Sure, it's basically boring is the way to go. You don't really have to get excited by everything all the time. That's the message. But
Absolutely.
since you are mentioning
Absolutely.
things, a lot of questions are coming to the fore. Since you mentioned that we will survive the tariff war, Trump has been, of course, mooting higher tariff rates for different nations, right? 19% for Indonesia. Now he's saying he's not going to go below 25% for Japan. For us, we are getting comfortable with the 10% rate. The mini deal, of course, is still, the talks around the mini deal are still on. But anything above 10 to 15%, would that be a big negative surprise for the market? Would you say that that is something that's not in the price and that could be a big negative surprise?
Yeah, I think it will be a negative surprise. And while the markets may handle it in a somewhat more matured way and may not overreact to it, but these tariffs are suboptimal. They are inefficient. They reduce the efficiencies across the world. They are inflationary in nature. So tariffs overall are not great for the economic future of the global economy. But I think on a relative basis, India will probably do better than others, and that is going to add to us. So the overall impact of tariffs are negative, but we may do relatively better. So anything more than 10-15% would be a negative surprise for the markets.
Got your point. Another question just sprang in my mind right now about PSU banks. Of course, you are bullish on NBFCs as you mentioned earlier, but PSU banks are looking at, are looking at good gains. In fact, they've been outperforming private banks as well, and there is a lot of buzz of more government reforms. Hike in FDI cap, etc. There's been a lot of buzz around that. And of course, the governor has also, in a recent interview with Lata Venkatesh, has alluded to the fact that, although they have changed their stance to neutral, that doesn't mean that we cannot be looking at another rate cut, especially given the fact that inflation data, is very favorable right now. So in that light, how's the PSU banking pack looking like? Do you think the tilt should be more towards PSU banks now vis-a-vis private banks? Because private banks also have a higher proportion of EBLR loans. So your thoughts on private versus PSU banks? Where should one tilt?
While interest rates might come down by another 25 basis points, I don't think it's going to make any difference to anybody except maybe liquid fund returns. I don't think people are going to make their capex decisions based on 25 basis points cut off interest rates anymore. I don't think bond market is going to react to it. Is because bond markets are looking at the longer term inflation forecast, which is close to 4.5%. Core inflation is also high above 4%. So I don't think that 25 basis points is going to make any difference, except that, the banks who have, more linkages to the repo rates in terms of their loans will get more repriced faster and their margins will get squeezed in the short term. People are expecting that bank earnings will improve in the second half. On a trend basis, the PSU bank pack is becoming more efficient. Their processes are becoming more streamlined. Their internal structures, their lending, their NPAs are all in far, far better shape than ever before. There is no real threat of Indian interest rates going up and hurting their treasury incomes. So, one could take a bet on PSU banks as well. On relative basis, they are attractive, I would say. They are also looking to list some of their holding, the companies which are into different areas like, AMCs or insurance companies or any other ventures. So there could be some value unlocking there also, but eventually we will all grow at the GDP plus a few hundred basis points. So I don't think it's terribly exciting. It's not that exciting, but going as per our boring
Hmm.
theme, I think PSU banks are also
Hmm.
fairly decent investment bets.
Okay. So in that sense, if one has to, look at what kind of fund to invest in, would you recommend a multi-cap fund, or any other boring fund that you that should ensure steady returns?
So, Nanita, we have just launched our multi-cap fund, so I am slightly biased there.
Hmm.
But multi-cap funds do provide an opportunity where you invest, 25% in large caps, 25 in mid caps, and 25 in small
Hmm.
caps. So, in that sense, you are getting a balanced exposure to the Indian equity markets, which does not include, fund managers' biases, and the growth is coming
Hmm.
from small caps. The high growth companies are in the small cap category, and mid caps and large caps are fairly large now, and they provide some stability too in terms of earnings and growth, and in terms of market volatility also. So I think multi-cap funds definitely, I would not classify them as boring because the returns has been quite spectacular in the recent times. But with tempered expectations, one should consider multi-cap funds, which are a very balanced way of investing in the Indian equity market.
All right, point taken, and a good chat this morning. Sandeep, would like to thank you for taking out time as always and sharing your thoughts with us, and look forward to our next one as well. Have a great day.
Thank you, Nita. You also have a great day. Bye.
Thank you. Well, on that note, quickly take a look at where we are at when it comes to the market. It was extremely range bound, no clear direction, struggling for direction. That's what we saw today. Bias is on the downside right now. In fact, we've taken out the 25,200 mark as we speak, but just about flattish, not doing much. Even the mid cap end of the market is extremely flat. But the breadth thankfully is in favor of gainers, almost 3:2. That's the NSE advanced decline ratio, and even in terms of stocks, you're not seeing any big movers in the session. The biggest mover on the Nifty is Tech Mahindra, that's down just about 1.2%, and that too reacting to its miss on the constant currency revenue growth. But then that's the texture of the market. Hopefully we'll see some betterment as we proceed further in the session. But with that, we've come to the end of opening bell. We'll be back with closing bell at 3:30 p.m. To take you through the market close, and of course the stocks that will be on our radar this afternoon. Have a great day, and stay tuned to Money Control for all your other news and updates. I'll see you soon.